Binance. It's a beast. And if you've got BNB token, it went from $30 to like $700, and now it's done a nice correction. So what should you expect next for BNB? Well, that's what we're going to cover in today's video. And if you like today's video, hit the like button, subscribe, hit the bell notification, because my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading currencies for over 15 years, and I was featured in the best-selling book, High Probability Trading Strategies, in 2008, and now I bring that knowledge and wisdom to the crypto markets, because we can project with high probability what's likely to occur, and that should help us make objective mechanical decisions, business decisions, so we can maximize the upside and minimize the downside. And if you love today's video and you want to learn more, take my free crypto trading masterclass. It's in the link below. It shows you how to do the real high level fundamentals of Elliott Waves and some Fibonacci. So let's dive straight in. BNB token. So what are we seeing here? Now, even if I just clean up the chart slightly, I'm just gonna look at the pattern. What we're looking for is, what is the pattern that's unfolding, and why am I convinced or confident that the markets are likely to move down in BNB, or the price action, before it really moves to the upside? Well, let me educate you on Elliott Wave. High level principles. Elliott Waves tend to move in 5 ways. 1, 2, 3, 4, 5. And it represents the psychology of the markets. Optimism and pessimism. You know, that's really what it's all about. And if you can understand those emotions of fear and greed, it shows in the price action. So here what we're seeing is a nice 1, 2, 3, 4, 5, where the price went up to around $700. And then we saw this big correction. But corrections tend to have a minimum of 3 waves, and we'll label them as an A, B, C. 3 waves. So when you see a strong wave to the downside, that's the first wave. But that's one of 3. So what tends to occur next is a second wave, and it's normally as an A, B, C. That's what I'm labeling here. And now I'm looking to go for short. It's like, you know, make money on the downside, making money whilst the market goes down. So we're expecting, and we should anticipate, a move, which is this C. Is it going to unfold like that guaranteed? No, I can't predict the future. I have no crystal ball, but this is the next best thing where we can project with high probability and then have entry exit points. So with BNB, I'm anticipating, based on Fibonacci and Elliott Wave theory, because it's only done a big wave 1, as in an A, the first correction, there's the second wave, and then you should normally anticipate a third. There's some Fibonacci price, and I've labeled it as a 2 with a question mark. So there's some good money to be potentially made on the downside, so just be prepared for that as well. And as the market provides more data, we are able to objectively look and say, okay, this is what it's looking like. This is what the psychology of the masses is looking like. So we want to, the trend is your friend. You want to ride it until it ends. So we want to be like a surfer. We want to jump on those waves and ride those waves when they come. So what should we anticipate? So if you don't want to short, or you don't know how to short, because it's more of an advanced technique on making money when the market's going down, is to really be patient to see if it does pull down into the $180, $175 mark, then to look for a good entry point for riding the wave 3. Now, wave 3s tend to be the biggest, strongest waves. So if you was a surfer, imagine it's going to be the wave like in Hawaii when the waves are huge. They're like literally 100 feet higher waves. I don't surf myself, but I surf when it comes to trading. I want to surf these waves. So either looking for a short position now with high probability, or being patient. Now, if you already hold BNB, you know, this should also help you either anticipate. So if the market does pull down to 175, which is, you know, it's like 50, 60, 70% pullback from where it is right now, which could be quite concerning because you're going to see your profits diminish. However, being confident that in the long term, so you heard the term HODL, HODL, hold on for dear life. This will be one of those times where you can hold on with confidence. So there you have it. BNB is a beast of a project. Binance, one of the best exchanges. Binance Smart Chain, love the blockchain itself. BSC Pad, which is the launch pad for Binance. They're bringing lots of great projects to the Binance blockchain. But we're just looking at the technicals, pure technicals. I'm ignoring fundamentals. I'm ignoring the news. My eyes are just purely on what is the chart pattern based on psychology, Elliott Wave and Fibonacci telling me this is what it's telling me. So I'm looking for a short. In fact, I'm actually short on BNB. I've made some good profits on the way down. Then an initial move down. Do you want to see it? Do you want to see my trade? I'll show you. Do you want to see it? You sure? All right. All right, I'm going to show you my trade. Let me show you my trade. So this is a daily chart. The information of my short trade is on my hourly chart. So what I did, because this is where it becomes, who cares about forecasting, right? We're not in the business of being right. We're in the business of making money, right? And if your trade analysis or technical analysis is not making you money, what are you doing it for? We want to have mechanical, objective opinions on the market. And when the setups come, we take action. So here's the action that I took. So we just saw, this is that high that we just saw on the other chart. If I make it really clear for you, let me do this for you. Let me make this crystal clear for you. Days, boom, boom. So let me just make this crystal clear for you. Because sometimes it's confusing when we jump from a daily chart to an hourly chart because the bars look the same, but the information is totally different. So this little pink box here, this little pink box that you see here, the date is the 4th of June. That is the exact same pink box here, right? And the reason you're seeing many more bars is because now every bar represents 1 hour. So we have more data, right? And that's what we're looking at over here. So the market did a move to the downside. Now, when you're having something called an overbalance of price and time, it is the first strong indication. This is like a WD Gann thing. This is a WD Gann is a guy from the 1800s, 1900s, early mid 1900s. Superstar. He was one of the first guys to really bring technical analysis to the forefront and did some great research. And he said, when there's an overbalance of time and price, it's the first strong indication that the trend has reversed. So here, this move, this downward move in price is bigger than any other downward move on this previous swing, right? Hopefully that makes sense, right? And I'm seeing that as a wave 1 and a wave 2. And one of the best times to enter a new position is, now we're going for the downside. So when you're looking at Elliott waves, this is now just the reverse. Now we're looking for the downside. You're entering as close to the end of a wave 2. So I was able to identify this end of a wave 2. And if I just zoom in for you here, so this is where it becomes really practical, where you can make some really good money. With minimal risk, by the way, because I'm going to show you one of my strategies that I learned. So I went short on this green line. I put in an order. So I use a particular exchange. There's a few exchanges that allow you to do this. You can put in an order so you don't have to be there manually to press the buy and sell button. You put in the order. And if I actually do it like this for you, I wasn't planning on doing this, but there you go. So I put in the order like this, which said short order on this green line. And my original stop loss was up here. Now what the market did as it unfolded, if I can, there we go. It actually went up. So once I put in my order, my stop loss, I wasn't at the computer no more. So I've put in my order, I'm on with my day, and I'm only going to check it again in the evening. So it moved up and then it just spiked down and it triggered me in. So this was my order to make money on the downside. And then I use this momentum indicator down here and it just gives me the flow of the momentum and the price. And as the market unfolds, you know, the market, even just that move is a really good profit, but that's not what we're looking for. We're looking for the big move because the big money is made in the big move. So now that this is done, its first swing on the momentum and as a second swing, I actually exit my position quite early, half my position quite early. So at this point, after this, I won't go into too much reason, but this is my first exit. I exited my half of my position at this point. Why? Because when you're looking at the markets, you always want to assume you're wrong. I'm an optimist. If you get to know me, I'm probably the most optimistic guy that you're ever going to meet in your life. However, when it comes to trading, what I got taught, best practice is you must assume you're wrong. When you're doing your Elliott wave counts, most of the time it's not going to be a clear count, but you must assume what's the minimum that would occur if you are wrong. And that's where you want to exit your, what I call your insurance policy, right? Because if you exit your insurance policy, then you're guaranteed a small profit or break even. So as I exited my first unit, I call it a unit, it's like your insurance policy. I've locked in some profits. I then move my stop loss to break even on the rest of my position. So now I'm guaranteed this profit. So this is the art of trading, by the way. Most people focus on making money. Actually, the pros focus on capital preservation. Do not lose money, because then you can just keep playing the game. So let me just jump in. This is a bit more of an advanced lesson than I was planning. I was just going to give you a quick update. So what we're looking for is this big move, right? This big move, and really riding that wave, surfing that wave till the price gets to, if it gets to $176. So there's a lot of money to be made in that space. So currently, when I jump back into the hourly chart, I want to give you context, is the price is still at 390. So it's only moved, what, $20, $30? So we got loads of room to the downside. So position 1 is all about insurance, protect your capital, capital preservation. Position 2 is about surfing the wave aggressively. And if the count doesn't unfold as we anticipate, we still make money or we break even. In this case, we're guaranteed a profit now. So now as the market unfolds, where is it right now? Literally right now. So you'll see up here, it came close to stopping me out on my second position. That's just the nature of the game. I would have been guaranteed a profit, but it didn't stop me out. It's moved to the downside. So now it looks like it's done what I'm going to show you here. A wave 1 and a wave 2. If you've seen my crypto masterclass, if you haven't taken my crypto trading masterclass, how to fund your retirement, it's in the link below. I cover this in a lot more detail. Exactly this, the principle, the concept. So you can trade with high probability, so you make more money, minimize your losses, and you can ride that wave. But I cover the insurance policy concept. That's one of the biggest secrets that most amateurs just do not understand. But what I also cover is Elliott waves tend to break down into a lesser degree. What do I mean by that? So this is a wave 1, looks like a wave 1, a wave 2, and then we're gonna see a wave 3. But when you see a wave 3, it also has a lesser degree of a wave 1 of a wave 3, a wave 2 of a wave 3. Everything is difficult before it's easy. First time you're hearing this or seeing this, takes practice. I cover it in the crypto trading masterclass in a bit more detail, so I would recommend doing it. But I haven't labeled this yet, but this looks like on a lesser degree. I'm not planning this, guys. I was planning to just do a quick 5-minute video here, but hey, gotta go with the flow, right? This looks like a wave 1 of a wave 3. Even if I draw it like this, so it's clearer. Or even if I say it like this, wave 1 of 3. And then this up here actually looks like a wave 2 of a wave 3. This up here. And if you also look at this, I'm showing you this because these setups come up quite frequently. And when they do, it's your job to take that money. When it's given to you like this, it's high probability. It looks like a nice ABC of a wave 2, of a wave 3. And then we should potentially see a massive move to the downside because wave 3s tend to be the most impulsive and the wave 3 of a wave 3 tends to be the most aggressive. And we want to position ourselves for those waves. Just imagine yourself, you're a surfer and you're kind of waiting patiently, just kind of, strolling, not doing anything too aggressive. And then you see that wave coming, boom, you want to be in position, ready to ride that wave. So now I got into my position up here at the beginning of the wave. And, potentially could take another position over here because it is risk-free. But there you have it. So BNB, that was a bit more detailed in advance than I was planning today. But even on the daily chart, on the momentum side, the momentum is still bearish. So we should see a final leg down to this range. Plenty of room to the downside for opportunities. Not guaranteed. We don't forecast, we trade. So we're looking for information that gives us valuable insights on how to make money. Why? Because we're in the business of making money. We're not in the business of being right. I don't care about being right. I care about making money. Because often you'll see my analysis doesn't sometimes unfold as anticipated, but I still make money. How? Well, I just showed you. Last loop, right? Last loop. Because most people don't get this. And I want you to get this. Look, right now is live. This is not hindsight. This is live data right now. So we have to go with the live data. Yeah, looking back, they say hindsight is 20/20 because looking back, it becomes quite obvious. But looking forward, we are doing leading indicators. We are projecting what's likely to happen in the future, and we have to make decisions now based on what we believe is going to happen. And then that's where you have to have confidence in your analysis. So right now, if this market, let's just say for whatever reason, there's forces in the markets that I don't have no control over, you don't have control over it, and we need to accept that truth. Most people can't accept that truth, but if you can accept that truth, you're now becoming more like a pro. But let's just say the price does this. Do I care? No. Why? Because I've already locked in my profits. I'm risk-free. What am I anticipating? Well, I'm anticipating that the price does this. How much? Well, actually, this is what we're anticipating. See how much movement's there to the downside. So if I just put that into context, right, this is where we are. This I've also put here. Now you get some really advanced stuff today. This I've put here as minimum expectations. That was my minimum expectations, but the market didn't unfold aggressively to the downside. So hence I exited my first unit a bit earlier based on momentum. These are all in the trade plan. So what I also teach in my advanced courses, not necessarily in the crypto trading masterclass, because I just cover the high level top principles in my advanced courses. I cover how to have your trading plan step by step, so you don't have to think in the moment. You just know before. It's like a business plan. You know how you're going to manage your entire trade, whether it's for days, weeks, or months. You know exactly what you're going to do ahead of time. So here was my minimum expectation, but we're in this position because there's a high probability that the market's going to move to the downside. And if it does, I'm going to be that top surfer and I'm just going to ride that wave, because the trend is your friend. You want to ride it until its end, until it reaches its bend. And that's on the upside and the downside. So some of the advanced strategies, you can make money on the downside as well. So there you have it. BNB, you have a very full detailed analysis now. It looks like it's done nice. If we just loop on the daily chart, just quickly pull it back in, boom, boom. Hopefully appreciating these extra nuggets of wisdom. We got this nice move to the upside. You know, it went from, it was a beast, right? $30 to like $700. You know, that's what BNB did. Strong project. And then it has this nice correction, but corrections tend to always occur in three, minimum of three, and we always want to expect that because that gives us the edge on in our favor. Is that a one, like an A, which is the first wave, a B, a second wave. So we should anticipate a third. That's going to be here. We got some price targets based on Fibonacci ratios, and then we just enter the position and we ride the wave. And then right now there's no action for me to take unless the price goes lower, and then I have my price alerts and so on and so forth. Woo! Covered a lot today. So if you love today's video, you must love today's video, because I believe no one is doing this kind of analysis, especially in the crypto space. This is way beyond just simple support and resistance, way beyond lagging indicators like moving averages, which can be very insightful, by the way, way beyond simple chart patterns like head and shoulders, cup and handle, and so on and so forth. Elliott Wave is the level. Most people don't understand how to do it. I don't know why. Maybe they just haven't put in the time, but it is like the good stuff. It is like the best, the creme de la creme of trading. It's the closest that I've ever seen anything where you can predictably project the future. Like you have a crystal ball with high probability. And when you can do that and the setups are obvious, you just ride those waves. Like, subscribe, hit the bell notification, take the free crypto trading masterclass, how to fund your retirement, because I jump into these principles in a lot more detail in layman's terms, in plain, simple English, because you have to understand the concepts in theory first and then the practical, and I cover both. So there you have it. I'm Jagir. I've been your mentor today. Hopefully you got some great value. I will see you in a future video.